Hello and welcome. It is the 10th day of December 2019. All bets, trades are within each his own risk and their own reward. Let's start off. Within Bitcoin against the US fiat currency, priced in as at almost 20 hours Eastern time, 8 p.m. New York time as well. $7,235. Now 27. Of course, it'll be a different price as you are watching this. But what are we seeing here as far as where we are now? Always, where are we now? Where have we came from? And where do we have the potential to go? Well, it's always in situations like this based on where we are. It's got to break the range, and until it's not, it's in the range. And of course, the lower end of the range would be about 71 high change, and the upper end of the range is around the slot machine number, all sevens. So therefore, we see we came down this lower end before, rallied up to this high. Now we're back down. That doesn't necessarily mean it's going to break it. But the thinking, yeah, it's definitely looking more favored to it. Could break, just go down there any time. If it does, probably going to be a fast move down to where we came from at the previous low. Thus, decent sized moves on here you'd see on the hourly and all those shorter term time frames. And even the 5 minutes over a cup of coffee, it goes down like 6, 7, 8%. Very common. And then when you have those moves, whether it be up or down, like one of those straight downs, oftentimes some sort of sideways action could happen. Of course, if it did something like this, you'd be like, ooh, breaks the support. You'd be looking, oh, maybe we'll do this and resist here, whatever. But when I talk about different moves, I can either say something of a concise move or a fast move. And the more I've been doing this, the more I've been thinking concise move is a better term to use. As we take a look at this on a more longer term time frame, and we'll just expand it to 3 days, and we'll add some of these Fibonacci lines, which represents from the big high and this low in here. As the first half of the year, really the second quarter of the year, more accurately speaking, the price had a big surge from about 4,000 up to the 76.4% Fibonacci level at 12,856, piercing above it first on around June 27th and finishing off its hit there July 9th, almost getting near there on August the 5th. It supported the level. It did not resist on the way up at 98.14 several times, but it did resist it on the start of the 4th week of October. And now, as I've been stating in here, this was a pierce above. Usually it's pierce extra. And more, it's still looking like that's going to be the case. As what has it done from the fact? Where have we came from? Of course, from this high. Where are we now? We've been going sideways. We're in like period number 6 or 5. But it's been hanging within the 18 average. So it wouldn't be a surprise to me if I see this break down below this, the start to falter lower, and then pierce below the 6,342, and then what happens? A move to like 6,093, 559.99, and probably like in this area here would be a more accurate level. Maybe we find support at that point, and then if not, the must-hold area for the move from big low to big high, I would have to think is total in this area of like the low 5,000, high 4,000 area, 52 to 4,800 area, and that's of course on that situation because. To me, when it comes down to the overall aspect of cryptocurrencies, we're either in it's going to work or it's not going to work. There, to me, is no denying how pretty much every single world's fiat currency is created, distributed, and all that type of mumbo jumbo. And that's a big reason we've had this big up run. And from key highs to key lows, well, we obviously had that key low in here way back when. Bitcoin, $4, $2, all that stuff. 2012, 2013. And then at the end of 2013, it goes up to 1,000. Mt. Gox, all that stuff. Big bear market. Manages to break through. And when it starts to go above the 18, it never really falters below the lows. Hits the high of 20,000 at the end of 2017. We're pretty much on that anniversary now, 2-year anniversary of the high of $20,000 Bitcoin. It has then not came back to where we came from, but has had one low. That's the key thing, has not came back to where it came from. Thus, when we look at market movements from key low to key high, by no means the move here destroys the trend or the move from this to here. from here to here. It would be one leg lower and then another leg lower, trend within the trend, so a downtrend within an uptrend. You make a few lower highs, lower lows, and an uptrend, if that's, of course, what it is, because either the crypto scape and everything is going to have a significantly nice move, and it comes with big volatility regardless of which direction it's mainly going to go. And in a situation of that, the tremendously large gains. That's why I look at it, if you are just really bearish on that of cryptocurrencies, then you should still be in it. I believe that's what I would think if I was anyway. And I say that as in a hedging, a literal hedge. What if you're wrong? What if it does do good? If it does do good, then you're going to have some exposure towards such. And if it doesn't, you put in the amount that's like, okay, this is hedge funds. You're like insurance against the fiat debt notes. It's not as safe as precious metals, but it could be more profitable along the way. And if you've been in the situation and during this time thinking about cryptocurrencies, well, the prices have been lower. If you obviously were thinking from here, well, it's not as good as it was before, but still overall, it's not. We're at cheaper prices, as you could take a look at it. And in buying in here, well, we're at the same prices as we were when we reached this level October of 2017. So now we're entering 2.25 years from the first time we even reached north on the way up for the first time, that of around $7,000. And it could happen at any time as far as any significant major move up or major move down. But what seems to be a very much an easy guarantee, I don't know how it can't. And it shouldn't take too long for either and or both to happen. And I don't think it's going to be and. Is that we're going to have a significant break below 1,000. And when I say significant, 800 isn't that significant. 400 to 200 would be. And anything lower obviously would as well. Or a significant break above this resistance. And 35, 40, 50,000 isn't significant. Minimum 60 to 80,000, which is like a 3-4x move above resistance. To me, that's guaranteed. And it shouldn't, again, take too long. I mean, if it takes 3 years, that would be a long time, I would think, in the grand scheme of things. But again, just as like a hedge position, if that's where you're looking at it. Two-way, I mean, you can look at this as a risk-reward, major profitable way of playing. And then, of course, you can look at it on the and or again as a hedge against fiat currencies. As far as Bitcoin dominance is concerned, it's at 68.39. Let's move on to Theta. And well, I mean, I'm just giving you the update on Bitcoin dominance just because it's not really doing much, but it's just keep on waiting. It's one of those things. I could wait 20, 30, 50 days before that thing gets wild. I could wait like 2 days. I'll just, whatever. I got no choice. I remember back in the day, I would go traveling, like different like campfire or campsites where you could have campfires, and they'd have like levels like of scale of how hazardous or how likely a fire would be, between extremely rare to extremely more very probable kind of deal. And if I use like a scale of like 1 to 100 of how volatile these markets overall are, 100 being so volatile, like 30% moves or like nothing compared to other ones, 2017-esque like being high. Well, on a scale of 1 to 100, right now we might be at 8 or 12. It is really bad. But we are still getting a few moves, and a lot of these failed moves are happening right now within Theta. And as we can see, I mean, these are the size of these moves compared to the moves of it which happened before. I mean, the scaling, again, very, very microscopic. But within what we are looking at, we've had this situation of this failed breakout very fast. And even a small move from this key low to this key high. When you see in price going from 9.5 or 950 up to 1120, that's like 170 differential. That's not that much. That's like 18%. And then, of course, this is like not much for days. But we get another move, but it's a failed breakout. Back down to this low. Again, another move up to this high. This is just happening recently. And back down to where it came from again. It has managed to rally up from this low. And therefore, when I talk about all these situations, must hold area. When you go there and you rally from it, that's big. because if it doesn't succeed from this point forward and we can see this gets violated, we can look at this more clearly short term, and then you realize we're probably at least having a move down to this previous low. But if it does succeed, you see I actually get above the 18 average of highs, then we can start talking about, okay, well, in a breakout, where were we supposed to go? Oh, match previous high. That's exactly what we did. So now if you have matched previous high, support the phase correctly in the correctionary phase, or you pass it, we'll say, 18 average, you can't see it too with all my blue drawings on here. And where's my other one in here? Why is it not loading? There we go. 18 average of lows, as long as it succeeds in the hold. So, I mean, it came down to it here so far, and then that usually tells you that if you get the higher low, you get the pass on correction after the move, you leave it, you get excitation from this, then we could the odds are you're not going to get great resistance here. Next key high is this one here at 1300. And really 1400's been a big historical number in the area. So 1400 range would be the next big level of resistance. Let's take a look at this on the shorter term time frame, and we can just see how wild some of these moves are lately. That is, when we just take a look at this type of situation, this in here, then we got this coming back, just this period in itself is wildly volatile. And here we have where we see this is where the must hold area would come into play. So now from this low, it's entering its correctionary move. This is big, because if it fails this and starts to curve down, as I've mentioned before, we're going to hit that big low, probably breaking down below there. But if we can somehow, at least at first, find a way to stabilize within the 18, meaning you get in there, you stay within it, meaning if you go below it, you get back in it relatively quick, or definitely whatever support you go below, it holds. And then eventually, of course, get in it. But then after neutralizing such a band and then getting it above it, that's where you got the attempt to go big. And that's always what it is, because when you look at all the previous time, we've had excitation amongst the 18 average of highs amongst here. We had it in here, and it managed to make a move to this high, really even this high. You can even say we had a little bit of excitation here, but you could have got stopped out and you might have had to wait, but it never had that instant move, for it did it on this excitation, getting up to this high. And then this one in here got up to this high. And then this one in here failed. And that's the last one we've had. On the single hour term time frame, we have the, you can see the wild moves in here. This is this big low. And here we have a move to this low. You come in here to the average, show weakness at the 18 lows. When you break this short-term support, it held and stayed above previous support. And I like to say it that way because it went below, and it did for a while. But as I state, if it doesn't find support like at that general area, to hold and stay on that, that means wherever it does support in a non-violent large move lower, needs to hold. And it did here. And then it succeeded so far in now correcting this 18 with an attempt to get this thing in a bull run. Its first attempt since yesterday night, about 25 hours ago. So we'll see how this attempt manifests its situation through, because if I see this thing failing here, yep, we're going back down into this area here. And in final comments, at least with cryptos, as we next move into precious metals, is that if you are looking to try to get the best gains in cryptos, what I like about altcoins is like I talk about trading within ratios, but even ratios, Bitcoin's a ratio, the dollar, Tether's a ratio, whatever you choose, that if you find ways of buying and selling for profits, you can overperform the market, is another term. And if you're looking to do things like accumulate precious metals, there are several places, at least in Canada and the US, and it's easy for myself here in Canada, to turn cryptocurrencies into that of actual physical silver and or gold, whichever, and it's pretty amazing to be able to turn cryptos, and then 48 or 72 hours later, maybe 96, whichever, 2, 3, 4 days later, the delivery truck comes by, and there you go, you have some metals. And with the metals, we'll start with silver now as we move into this, do a little bit of silver, gold, and via request, and I haven't done that in a while, is that of Palladium. So first off, before we get into the actual chart itself, same thing as far as if you're in the camp of I don't believe in gold and silver, I believe in fiat currency, or if you're in the camp of cryptos are just going to crush silver and gold's ass, I don't want to get into it, and especially for those who have decent availabilities to allocate funds. Meaning, there's some people like, I wish I'd get into gold and silver, but if I can only buy so much, but maybe I'm going to take a chance and go into cryptos, and then I'm going to try to accumulate a lot more. If that's the case, good luck to you, because to me, as I've stated many times before, to me, this is the safe run. Long term, it's not going to have the volatility. It's not as easy to flip them in and out like you would with the cryptos on so many levels. It's got a lot of disadvantages. To me, it's just as tangible as cryptos, as I could put in a safe, private keys versus the actual physical metal itself. But I know for sure silver is going to be something that is going to have value, not only as we move into the 20s, but even the 2120s. It's going to have value as well. I mean, there's nothing else more I can say other than that for that type of purpose. Within the 18 average, we've had the price come down barely below this low, stabilizing barely lower within this 18. Decent size down day, 2.5% on Friday session. Really, it's doing too much sense. It's telling me we're going to 1613 and probably piercing below it. It wouldn't surprise me if we rally up towards this 18 average of highs, which would really be resisting this major area of support, which is at around 1690, and it could even be up to 1695, 17, any of that area. But the last 10 cents of 16, I think, is going to be some spot, because it'd be match up with the 18 highs. Every time you break a key level, I say, okay, now I'm looking for this level to be resistance, because it usually is. So if the rallies occur, then that's going to be what I'm going to be looking for. And then if this thing starts to falter, we can barely see an uptrend for 3 days. The route that it's going to is 1613 and most likely piercing below. So I would expect like 1601, 1605, 16 even to be tested convincingly, which means I don't think it's going to get above the 18 average of highs unless it's a failed breakout beforehand. And that doesn't surprise me given how gold and silver and nowadays even Bitcoin works, where it's often, it seems, you get a failed move before the real key one. I mean, if you have an interesting key down or up move, that means, say in a down move situation, maybe like right before that move starts going down, maybe an hour before, you have a nice little rally, nice breakouts, and then boom, it's a failed move. So common these days. But we'll see how it works out. And then when we get there, that's going to be a key area of support. How will it react to the situation? Because when we look at this on the monthly chart, we got the 18 average of lows sitting in here at 1558, rising. So by next month, if it gets into January to do it, it would be closer to like, high 15s, low 16s. And this is that big test move. It's the second one. It's almost like failing a driver's license test and doing it again, meaning it failed it here, practice time, attempting it again. So now this is one of those do you continue on or fail moments, which is within this 18 and how it reacts within it. For again, you have a situation where you establish this, you come back to previous high, just like I think it was the Theta or whatever chip market I was talking about before. You retest it, you succeed upon this move, and you succeed by having price correction via that of price and or time meet up. And that's why I like the 18. It does a very good job to help distinguish these correctionary moves. And then when you see it get above it, if that's the case, if it correctly succeeds within this, that's supposed to be a check mark, just doing whatever. But if it succeeds this and then you see it leaving back to the upside, that's when you can start talking about what's going to probably break this resistance and go to next. And then next, well, quickly speaking, where does it look like just fast, like just do the 5-second check? And that's right here. Key level like high 20s, 27, 26 to 28 is where it should go on a break of this resistance. Let's move on to gold next, which is in at 14 2/3 approximately. As it too has come up to this, major 61.8% Fibonacci level from this high and this low. To say that it resisted and had some battle within the first 38.2%, would have been a sure shot, obvious, and no brainer, of course. Like, yeah, and how many times? 1, 2, 3, like 4. And we can see after leaving this, a concise and definitely fast move to this point. And markets can correct via that of price and or time, and there is no and, it's or, and the answer is not, through, at least not now through price, it's through time. As from the time that it got up to here, we had 1, 2, 3, we've completed 3 periods. Hasn't went down much, not even close to touching the 18 highs. And it even hasn't even really attempted to break the established resistance, at least not since the September highs. But not even close to coming down to, not only is it not close to coming down to where we came from, and that's key fib level of 13 1/5, 13.21 of course, but it's not even close to stating that it wants to do that. Meaning, if you see it going down to 14.22, 14.08, okay, looks like we might be headed down another 80 or 90 more dollars or something. Yeah, well, it's not even doing that yet. And then when you look at something like this, okay, what does the short term state? Because if you break any key levels, that's what we'd be talking about. And if this thing get any forward momentum, I would be expecting a concise, most likely fast move up to about 16 3/5 or 16.70. Within the daily time frame, it is so far resisting here, this previous level of support. Okay, that you can say that's a bit bearish. It's been just holding in there with low volatility, the low end of here from this move. That too, you can say is a little bit bearish. It has broken down. No, it hasn't. Broken down below this level of support. Yeah, until it does, it's still correcting within it. And there's your key level in here that it established back on like November 11th, even really November 12th. But from the move starting November 7th, finishing November 12th, it established like 14.47. It pierced above it here on the 26th, and it's even pierced above that number thus far. So if this doesn't hold into play, then we could at least look at, for first, going to like 1400, I would think, as a key level of support. Now on to Palladium, which is having green candle after green candle. And how much action have we had below the 18 average? Well, for the year, it managed to get up to this high at 16.12. Since then, we're up 280, or about 15%. But before it got to that, it went down, and it had a big break below the 18. First establishing support here, retesting it, failed breakout, and then new low in here. Very much successful in here. And then for the second time this year, it had a little bit of run below the lows. Did so here, and then in here, which was a higher low. And then we see in the attempt of excitation both here and here, and you see how it's a successful move when you have a significant higher low. Even though it failed the 18, you know that the time frames, I'm not going to show it here, but like the weekly, 5-day, whatever, would be coming up, and they'd be testing it in here, and then they would have exited, and they would have done all those great things as well. And then breaking above, and again, you have that spot where you match previous high from this to this. This was a higher low, obviously, from all of this. So then when you higher low it again, you break out and you see all this happening. That's why I say so many times the mathematical odds of finding good resistance here is weak. And we can see it was pretty bad here because it didn't resist it. And instead, it had a significant move, key level from key resistance. It established such at 18.20, and then again it falls below the 18 average of lows, and it did so at around November the 11th. But not for long, only a few days, for it came up to the 18 average of highs on November the 14th, pulled back. Then the very next day, it came to where it came from before, and then it reached up to the 18 highs, paused it really for 3 days in here, and since then, it's been grinding its way consistently higher. And there's been no end in sight for that. It's going to have to stop at some point, but that is the trend right now, is grinding gains. And now that we've established this level, it's had a good noticeable break above it. If there's going to be any retracements, that's an area I'm going to be looking for. Or chart, that's just the key level of major support. At least the next one. I mean, it's went up so high that we could easily be testing these levels, and that's easier to look at when you look at longer term time frames. And on the monthly, we had this big level of resistance here. Start of the millennium. Huge volatility going from barely over 1,000 to about 150. Back up to 6, back down to 150. Then it came closer to that 1,000, like 800s and change, back down to 500. And then we had a little bit of resistance here on the start of the year, right at this level, that small pullback. And now we can say that it's barely been a concise breakout higher. Because from where we stood before, we have this much room higher. And it could be more. But it's a decent move just to come down in here. And if that's the case, I would be I'd be thinking, okay, that's just what markets do. The upper end of where we came from is where I put the line. The lower end of where we came from, I think the most one would be here at 590, but even in this general area of congestion. And that's when I use the word congestion, that means it just trades in and above it, up and below it. So the entire congestion area of this is here. This all stuff that ranges from like 2011 through like 2017-ish area. So that time frame. And for how much it can go higher when these things are bull markets like this, I mean, seeing 2,500, 3, 4, 5,000 happen in a concise, quick period is no big surprise. And then when you start talking about breaking any type of trend lines to the upside, that's when things can get hog wild as far as market movements over what would usually would be a quick period of time. I'm not going to calculate where that is, but if you get a log scale chart, you connect these highs together in here. It should reach with this, so wherever it is, if it breaks that baby, boom, that thing could go. Anyway, thank you for tuning in and have yourself a magnificent day. Bye-bye.